But I mean, with inflation, you're an investor in the stock market and stuff. What would you recommend people to do right now to combat inflation?
To combat inflation, I think it depends on your competence, and this is what I mean. What I tell everybody and what I tell all my friends is when they ask me, what should I invest in? I go, something that you completely understand, right? If you're gonna invest in stocks, make sure you either put it into the S&P 500 and you say, okay, the S&P 500 is a bet in the United States economy in the future, which that bet has never been a bad bet, right? It's performed 9% historically, right, for last 50 to 100 years.
Yeah.
And it's going to most likely continue performing that way, right? Because you're betting on the bet, like the top 500 businesses of the U.S., which is basically the U.S. economy, and those businesses performing, right? And if you're going to be picking stocks, right, in the stock market, then I would say make sure it's a business that you completely understand, that you understand the value of the business. So you have to now know how to value that business. And you see that it's going to continue giving you that cash flow, right? The same way that you get cash flow in real estate, you can get that in stocks. The only thing is you might not get the cash flow in your pocket because the businesses get the cash flow, but you can see the financials and they reinvest that cash flow to expand their business. But if you understand that the value of a business is just the present value of all the future cash flows, right? And you understand that and you understand how to value the business, and now you value the business and the value of the business is a lot higher than the price that it's at right now, then it makes it a good investment. If you understand that and you're competent in that specific business or stock that you're choosing, then go ahead and pick it, which I would say is also the same thing in real estate, right? Yeah. If you understand how to find a real estate investment, you go, you find this property, you're looking for a 10% return, and you find the property that gives you a 10% return, go ahead and buy it. So buy something that you're competent in. If you're not competent in anything yet and you're trying to get there, then I would recommend, buy an S&P 500 ETF, right? Where you're just betting on all these companies, which you're going to do good in the long run.
They're
right?
the top 500 companies.
Top 500 companies in the world, basically in the United States. And
which is the world.
Exactly, which is the world. Maybe buy some, or another option is, find an expert. Find somebody like Julian, find somebody like me that I have a hedge fund, or find somebody with a real estate fund and invest money there if you can. If you have, depends on the amount of money, depends on the type of fund, but find somebody that you say, okay, I understand his philosophy. He knows it a lot better than me. I'm going to invest with him.
Well, would you recommend someone to just put money in the S&P 500 or I guess an advisor for stocks? Like Merrill Lynch and
I would
Morgan
recommend
Stanley,
S&P 500 ETF. Yeah. The only problem, and this is a problem I see with people, is that you have to understand that the market itself, and you have to have part of investing, and this is a major part of investing, is not just understanding the investment, but it's understanding your emotions, right, and controlling your emotions. So it's very easy to say, let me buy the S&P 500. If it goes down, I'm just going to continue buying, right? The strategy that I would recommend is, you make, I don't know, maybe $1,000 every week or something, or every 2 weeks you make $1,000, right? If you're a person that you work paycheck you get a paycheck to paycheck. Out of those $1,000, put $100 every single 2 weeks or every single paycheck into an S&P 500 ETF, no matter the price, right? If it goes up or down, you're just gonna buy an S&P 500 ETF. This is the problem. When there's a correction or a recession and it goes down, right? When it's the best time to buy, when stuff is cheap, when there's blood on the streets, what do people do? They get scared.
They stop the auto transfer to the account. Yeah?
They don't even stop the auto transfer. They sell.
Oh shit!
Okay. And that's what happens, right? Like they do stop the auto transfer, and then they sell because they see their portfolio maybe go down 5%, then another 10%, and then human psychology, you're unconsciously thinking that you're gonna lose the entire amount of money because you've seen that happen for the last 3 months, 4 months. So you're telling yourself, you know what? It's been going down. It's gonna continue going down. Let me sell at this moment when it's the time you should be buying. Right? And then the opposite happens at the top, right? Yeah. Why do you think everybody got into crypto right now? Because what happens? If everything is overvalued and you're in a bubble or you're in a very speculative moment in the market, in the stock market, or real estate, it happened in 2008, real estate, in crypto, and anything, right? And everybody around you is making money, even if you're not in there. This is what you're hearing. I'm hearing my friends say, oh, I just made $2,000 last week with this cryptocurrency. I just made $10,000 with this stock. I just made $100,000 in the stock market. And you're hearing this, and you're like, everybody's making money but me. Yeah. Let me put my money in. And everybody puts their money in the top, which is a moment of euphoria, when they should be selling in those moments.
You actually taught me that. You told me it's like a human emotion to buy the top because it looks good. It looks sexy.
It looks good.
Like
and you've been seeing everything go up for the last months on months on months, and you're like, it's gonna continue going up.
Yeah, no one wants to buy when it's down in the dumps. I actually have an alert set on my phone. I'm an S&P 500 investor. I invest in IVW. I have an alert set with E-Trade that says when it's down 2%, I buy a few shares every time.
Yeah, exactly. And that's that's one of the best ways to do it. And you're never gonna go wrong just buying the S&P 500 consistently. In fact, it's been proven that anybody, and I'm saying this, I know it's controversial, I might get some attacks here. Anybody could become a millionaire if they start investing in the S&P 500 young. Anybody. Yeah. By the time you retire, you will have enough money to take care of yourself for the rest of your life. If you invest in the S&P 500, every single paycheck, you put money aside and you invest it in there.
Yeah. If you get like an interest compound calculator and you start when you're in your 20s and you put $500 a month on it, you'll literally be a millionaire no matter what. Yeah, you'll be a millionaire
no matter what. I forgot the numbers exactly, but you'll be a millionaire. Like if you start like at 18, I believe, I think you'll be a millionaire by like 38. I think it was, or like 40, depending on the amount of money you put. Like it's not a, you can even like, there's calculations you can do. You put in money for 10 years and then you never put money again. And that money will still be compounding to the point where you're going to be a millionaire by the age of 40.
If you get a 7% return, I think your money doubles after every 11 years.
Yeah.
That's only 7%. And you said the S&P does 9% on average.
Yeah, it does 9%. And for the last, I think it's actually the last, 9% has been like the last 50 to 100 years. But for like the last like 50 years, or I forgot exactly, it's been like 13%, including like dividends and everything.
Oh, that's awesome.
Depends on the time period you look at. But for a while, like it's basically going to generate you a 9% return. So the way that, and people don't understand compound interest, but they're like, oh, 9% doesn't seem like that much. But when you're compounding 9% every single year, it's a snowball effect, you know, like that's what that's called. The snowball goes down and it picks up more snow, and as it gets bigger, it's still picking up more snow, and it gets bigger and bigger, and you know, it's an exponential curve. It's not just a straight line.
Yeah, definitely.
Right. So that's Warren Buffett's ideology. That's how he made his billions, and it's simple math when you look at it, right? If you compound at this rate, you'll become a billionaire. Yeah. You could even, I mean, with money right now, if you start very early and you start making a little bit of money and you start putting that there, you'll become a trillionaire. Like, I'm not even exaggerating. You know, life expectancies are getting longer and there's inflation. Like, you're going to start seeing the first trillionaires in the next, I would say, 5 to 10 years.
Oh, yeah. Being a trillionaire is probably going to become like
being normal. A billionaire. Like being a 100 billionaire will be like, that will be the same as being a trillionaire in